Good morning, guys. Good morning, good morning. Good morning, good morning, good morning. I already see a problem. Hold on one second. I need to fix my screen share is looking a little funny this morning. Bear with me for a second. I'm gonna just do a quick switcheroo here. It's gonna black screen for a second. I'm giving you guys a forewarning. Okay, 3, 2, 1. Okay, bam, bam. Okay, we're back though. All right. So, welcome in. Good morning. Good morning. I got one guy in the chat already. He doesn't even say good morning. He's just like spamming tickers, Apple, Tesla, Meta. No good morning. No how are you? No, how you doing? It's just go over the tickers, man. That's what it is. That's what he wants. Anyway, that's all right. We'll do it anyway. We're gonna do it anyway. We'll do it anyway. But it's a little bit funny, right? Welcome in, guys. Hope you guys are all doing well. Hope you guys are all doing well. Tickers, 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 tickers. Throw them in. Throw them in. Throw them in. All right. So this morning, though, we do have a lot of tickers to go over, obviously. So that is the important. He is right. We should get right into it, right? There's a lot to go over this morning. No tomfoolery. Today is 27th of January. We have a few days left of this year, or of this month. Not this year. Well, a few months left this year. Today's Tuesday. We have a few days left this year, or of this month. Jesus. So we'll go over what's going on here. I mean, obviously, some big things happening yesterday. You guys saw the delicate market, right? The delicate market moving higher, SPY moving higher into supply. A lot of the things that happened yesterday came into fruition in the pre-market. We spoke about the Appler, right? Apple being one of the main ones. I think Apple was the first or second ticker we went over, and it was one of the top watches. And you can see Apple is absolutely doing well, right? And if you have any position open left on Apple from yesterday's session, you are a happy camper. I have like 4 contracts left. I think 4 or 5 cons left, and I think I just like, to be honest. I swung a few cons because I was up quite a bit on it just to see what would happen. I kind of just sized it for zero. And I think this morning that size for zero mentality is going to work out nicely on Apple. So I'll go over the chart. We'll talk about what's going on there. We'll go over earnings reports, econ data, the whole lot today. I mean, there's a lot going on pre-market. There's a lot of movements happening pre-market across the board. We'll talk about it. Let's go over the SPY chart as well. SPY is going to be a big focus today as we move back at all-time highs. So without further ado, let's jump into our econ data, earnings reports, then we'll run into our charts. So welcome in, guys. I hope you guys all had a beautiful Monday, but it's Tuesday, so that no longer matters. Today is the 27th. This morning we have more data. Tomorrow we have more data. Thursday we have even more data. And Friday, even more data, right? So Tuesday session today, we have new home sales at 10 a.m. We have consumer confidence at 10 a.m. So some big things, some big market reactions expected to happen today at 10 o'clock. Besides that, we also have tomorrow, we have our FOMC announcement, right? So some major market events on Wednesday. This is the focal point. This is the elephant in the room type scenario on Wednesday session. Be aware of that, right? Now, I say this all the time. I probably push caution more times than I should, but again, I do it because cautious traders are smart traders. I'm not saying don't execute today, but I am saying one thing. I'm saying that yesterday's session was expected to be choppy. It was not choppy at all. Today's session is expected to be choppy. Let's see what happens, right? Again, we go in with little expectations. It's like you go on a date with a person, a man or a woman, and you have no idea what to expect. It's the same idea, right? They could be ugly, they could be handsome or pretty, right? That's what we're doing. We're going into this right now. We're going on a date. We don't know what it's going to be. Now, I think it's going to be a hog today. I think it's going to be a hog. So let's be aware of that. Tuesday session, I think it's going to be a hog because we have FOMC tomorrow. Okay, that's all I'm going to say here. Earnings reports reinforces that idea, right? Look at what's going on here. We got the UPSer pre-market today. UNH is dead. UNH is pastrami in a sandwich right now. Okay, UNH will go over UNH. We'll go over Boeing. We'll go over UPS. UNH, a little bit downside yesterday after some comments from Trump, but even more so this morning, the earnings report, right? So we'll talk about UNH today. Going into after hours, we have Texas Instruments, pre-market tomorrow. We have the Starbuckser, we have GD, we have AT&T, we have GE, ASML. ASML will have some chip impact. Microsoft, Meta, Tesla, IBM. Really, the after hours. It's really the after hours tomorrow that's important. The pre-market is not so important. Starbucks, I am worried about because I am an owner of Starbucks, shareholder of Starbucks. Okay, so let's go into our charts now, and we're going to start off with our first ticker today's session. Okay, let's talk about SPY. Okay, no, Herman, you are out of your mind. A hog like. Okay, never mind. I'm not gonna read the chat. All right, I need to just focus on charts. I'm just a charter, right? I need to stop with the analogies. So, okay, I'm just a charter. What happened yesterday? Yesterday's session, we broke above the channel, right? We broke above the channel and we did exactly what we expected on a channel break. This is what we expected. The market broke channel and we continued higher, right? I mean, can you ask for a different day, right? Basically, we had 691 as supply. The first candle market open, we broke above supply 691, and we moved from our level of resistance to our 694 next level of resistance. It was a level to level move, right? Basically, a move higher in the market, right? A grind higher in the market. Why? Because we broke resistance. And if you look yesterday's session, where was the best long opportunity yesterday? Well, it was at market open during the first 5-minute market open, right? Right over here was the first real area where you could have went, okay, I want to go long in the market, right? As soon as we broke above the highs of that Friday session, the highs of that Thursday session, and we now have entered, in my opinion, back into a little bit of a bull trend, right? And you can see this morning, we are continuing that idea, right? We're seeing a little bit of a gap up this morning after maintaining above 691. Now, here's the thing. We have big demand below 691. We know this is a big demand below. Therefore, if we do see us pull back for whatever reason back into 691, this would be a long entry, right? We know this already. This is a long entry. This is an absolute long entry. As long as you hold 691, we're bullish. That's what it is, right? But here's the issue. Wherever we talk about long-term ideas and short-term ideas, right? Yesterday's session, we said the short-term idea is bullish, right? Short-term, we're bullish, right? If we break with 691, we're bullish, and we go back into resistance 694. The long-term idea is still here. It's still looming, right? It's still, we are right back into supply, right back into that major trend line. And the question is, what do we do right here, right? This is an interesting moment for us because even though in the short term we're bullish, and we spoke about the bull trend happening if we reclaim 691 back in the short term, but the long term is sounding these warning bells of, hey, we have resistance. Hey, we have resistance. Hey, we have resistance. Hey, we have a big trend line, right? And so this area right here is still an important area to watch out for, right? And we know this. We know that we're no longer far from all-time highs anymore. We're right at all-time highs now. We broke into our 691 demand, so this is still a long entry if you do pull back over there. But can you really be a long right back into previous all-time highs? Not really, right? And so this makes it incredibly difficult, right? This is the problem. Let's pretend this isn't here, right? If you have a market with all-time highs over here, right? All-time highs, all-time highs, all-time highs, and the market has sold off a little bit, right? Reclaimed, and we're right back at all-time highs. What do you do now at this exact moment? Well, it's kind of difficult because yes, it's a bull trend, so you can still long demand lows for an upside move, but you're also back into larger time frame supply. So what do you trust? Do you trust a larger time frame supply, or do you want to go for the smaller time frame demands below? And my view is you do both, right? My view is you literally just do both. You understand the big thing down below is 691. So if we do pull back over here today and you see us develop a hold spot there at 691, go long, right? That's a long spot. It's a bull trend long spot. It's still a long area. If you lose 691, we're back bearish again, downside move. Our thesis is still driven by 691. We're bullish above or bearish below. But we cannot long back into supply here, right? And so the larger time frame says do not long back into supply. If you've done that before, you've gotten slapped in the face with the textbook. So for today's session, basically my mindset is this. My mindset is don't be long in a 694.60, 695.60, right? Be long in a 691. Maybe look for shorts today if I see a failure of these highs. Maybe, right? Maybe. I'm not saying we do it. I'm not saying we slap the short off immediately off the gate, but I am saying maybe we do watch for some retest rejections here, right? Because this is where the market's failed. If we clear above the 695.60s and we start building above it, then we're going to go higher. And where do we go higher to? I don't know, right? But do you expect an all-time high market breakout with serious strength, with velocity above the highs? Do you expect that prior to bam, bam, right? I don't think so. But again, we've seen crazier things. So my thesis this morning is basically don't be long in a supply, be long in a demand. And if you are long something today, long a different name, long an Apple, long an Amazon, long a Meta, right? Longing SPY back at all-time highs becomes difficult, right? So individuals, I think today are going to be more important to trade, right? On the ES chart, what is it? Well, yesterday's session, we did exactly what we sort of expected, right? We basically, we held above 69.25. We saw some upside in the market. This is our upside hold level. We never broke it. We actually reclaimed above 69.75, which is our big level. And we just ripped, right? That's all it was yesterday. Today's session here on this chart, you can see that we are right back at all-time highs here, But again, the larger term idea is, we are still back under supply. We have a trend line resistance right here. This, to me, is not an area that I want to be longing back into. This is not an area I want to be long back into. I do not want to be long here. This is not a long for me, right? Where it is a long is maybe back at a smaller time frame demand where I can look for a little knee-jerk reaction upside move, or I could look for an upside move above the all-time highs, above the 7,025 for a continuation play higher. But again, this scenario here, even this bullish scenario number one, right? Do you think this happens logically before our FOMC day and before our Apple earnings, before our Tesla earnings, before our Meta earnings, before all these other things that are happening later on this week? I don't think this happens. But again, I've been wrong before. So I'm open to this opportunity, but do I trade it? Maybe I'll just be a participant of it, right? Or a spectator of it, okay? But my demand below on the SPY, on the ES, is 691 SPY. That's my big level for today's session, okay? Moving on. On the QQQ, where's your supply? Right here, right? We're right back in the supply here in Qs. Yesterday was actually stronger on the Qs. You can see here, remember we said one level. We said this is why sometimes I love just one level, because if you have just one level, it makes it so simple. Anybody can trade it. 622.50. 62250 was your level of supply yesterday. We said above bull, below bear. And basically, market just broke above it, and then EMA'd all the way up, right? All the way up. And now where are we? Right back at 630 supply, right? The market this morning, the live stream, the title of the live stream is Market Back in Supply, right? And the Qs are doing the same thing. It's a gap up in the market back into a QQQ 630 supply zone. If you zoom out for a second, the 1 hour chart, you zoom out to what's going on here, well, you can see, look at all the times previously we've seen reactions here, right? This to me is of interest, right? We are back in supply. Do I want to be long here? No, I don't want to be long here, right? Do I want to short it? I don't know yet. But for me right now, I know for certain I am not a QQQ long here back into this island, right? Let's see tomorrow how things shape out, but this for me is not a long on a gap up in a supply. We know that. A gap up in a supply is a formula for disaster. Where is there a long? Well, maybe on a pullback long, right? Maybe on a pullback. Maybe at this point you can watch for pullback longs on the 624.80s, right? That could be a valid pullback long, but certainly not over here into this QQQ disaster zone. Okay, that's what I see here on this chart. Right, guys, let's move on. Let's go into our individual equities today, and we'll have. I think we'll have better value on equities. The first ticker was the IWM, not an equity. But what did we say yesterday about the IWM? Right, we are not always going to be right like this, but when we are right, I have to toot my horn. And you can see, look, what did we say yesterday about the IWM? We mentioned the idea of that 267 failure, right? And this was your head and shoulders that played out. And you can see, look at this chart now. You have your left shoulder, you have your head, and your right shoulder. Now, where does the IWM go next? Well, this is what I'm saying, right? Focus on these other names besides ES and Nasdaq, because I think that you will get better value in some of these other names, particularly if you want to short today. Why short? I mean, you can short SPY. I mean, I may short SPY, but you may have better movement on maybe an IWM, and especially if you can break beneath our neckline, right? And so your neckline level now is 263.50. It's under yesterday's lows, right? It doesn't take a technical analyst to tell you that, right? It's just basically short under yesterday's lows. If you break beneath yesterday's lows, we should see a move back into 261.30, right? So that's my new thing now is I don't want this to happen anymore. This is no longer valid, right? Why is this no longer valid? Because we've already done it here. And so in theory, because we've done a breakdown, retest, move down lower, at this point we should see this. That's what happens. And so this is your new play. If we just defend here at 263 and go higher back in the supply, this is no longer a short to watch anymore, right? I don't want to be watching 267 shorts anymore. The only short I would trade would be a neckline break, right? This would be a neckline break under these lows, because again, if we tap this 267 again, I think we probably just break it, right? Which would be a squeeze play, because there's probably a lot of shorts on this chart right now, right? So right now, under lows for shorts, but besides that, do not trade it, right? For me, for me, right? For me, everything I'm saying is for me and what I plan, but you guys can do what you want to do, right? Moving on, guys, the Apple chart. So into our equities now, it's 8:40 or 8:50. It's 8:50 flat, so we have 15 minutes of solid equity time. Yesterday's session, we longed Apple, and we spoke about long. This is the thing: is we got this chart. We had the announcement on this chart right before it even happened. Right? We mentioned the idea of this chart consolidating. Right? Consolidating right under our support zone, which was 251, which would be resistance 222 really. And you saw yesterday's session that we saw the first sign of a weak name turning strong, right? And these are the exact plays that are hard to catch, but when you do catch them, you are so right. And I love these charts because the contracts move insane. Even for us yesterday when we were scalping it in live, they moved like 20% on like a dollar move. It was a nice move. In the end now, if you held any contracts from 252 to 289, you're going to be up probably 100, 200, maybe 300%. I have a few contracts in February, so I'm curious to see where they open up this morning. But I'm going to be a very happy camper. Why? Because we were able to scalp this intraday, and because I was able to scalp this intraday, I ended up holding a few cons as a swing for me just to open this morning as like a gift. Now, granted, you're going to say, Brett, why didn't you tell anybody you held Apple a little bit longer? Because what if it didn't work, right? If it didn't work, I would have lost 100% on those contracts, and I can afford that, right? For me, that's $500. There were $100 contracts each, right? They're $500. I can lose that because I made enough money in this trade. But for other people, right, you need to build that cushion yourself, right? If you can build your cushion yourself and trust your thesis, hold a few cons, right? Swing a few cons if you want, maybe one con just to play it out. But again, if you make $1,000, don't have a $4,000 swing, right? If you make $1,000, have a 2 contract swing, 1 contract swing, because you have to understand this could have easily gone the other way, right? Easily. And as much as I want to say I called this, yeah, we called it, but we could have easily lost in this too. And I understand that, right? And so that's why we size for that. And so this morning, right now, above 222 is bullish. We reclaimed, we ripped higher back into our next level. And now in Apple looks like a chaser now. Apple looks like an absolute chaser. And I don't want to long Apple right now unless either one of two things happens. The first scenario is going to be either we break above 261, right? And if we clear above these set of highs here, which is far away, I know, but it's right here. This is a big level. If we can break above 261, this continues higher and it probably goes into 270s. So I am watching for 261 breakout. If it does happen, that would be a big macro break. Likewise, I want you to also watch the pullback long here at 256, right? You can also watch this pullback long. If it does pull back there, you can look for a long base entry off those lows, right? So basically either this or this. Those are my 2 scenarios today's session that I'm watching out for. If you fail below 256 today, then we probably go back into 251, right? 251, 252, which would be your retest of your breakout level from yesterday's session. So for me this morning, I really want to see it maintain above. At a bare minimum, I want to see it maintain above this level right here, right? So this is my big hold spot. If we can pull back here and develop a little hold, right? This is a long. If we fail below 256, then this is no longer a long. It probably just sells aggressively back into our 252, 251 area, right? So again, those are my expectations for today. It's either going to be our demand below or this demand below, right? If it pushes higher in a supply, don't be long into here, right? Let's understand that. I want to make things clear here. My view is that this 261 level, there's a lot of sellers waiting here. There's a lot of sellers waiting here. If it pushes into 261, you do not want to be long there, right? You want to be long only on a move above those highs, because if that happens, it's going to have already cleared out all those sellers, and it's going to zombie grind higher. But again, 261 big level of resistance. Let's not be long there. So if you are long from yesterday's session with us, and you have any runners, you are selling this morning, right? Because you do not want to be a long back into that 261. If it clears, you can re-enter that long on cheaper contracts, right? You understand that idea, okay? Moving on. Amazon. So Amazon, same idea as Apple, right? You can see here a nice chart, and this 240 level reminds me of the Apple 261, right? Same idea. And you can see we're consolidating under here for a few days now. And now at this point, your level is clearly not 240 anymore, right? Your level needs to be adjusted. You can see here, it should be adjusted to like 241. And so what am I saying? If Amazon, I was saying Apple, and then I switched to Amazon, and then back to Apple mid ticker. So that was ridiculous. But Amazon 241, if Amazon can reclaim 241, then this is a long, okay? So 241 breakout. If it can clear 241, look for that continuation trade higher. Where does it go to at this point? Probably back in 243. I remember what I said about Amazon, guys. I said Amazon at some point goes here, right? That's what we said. Now, just because it didn't do it yesterday doesn't mean it's wrong. It just means it was consolidating, right? This is a normal consolidation on a bull trend. And so my view at this point is, consolidation yesterday was nice. That was good. I actually like that consolidation. Remember, we said Amazon doesn't do it in one day, doesn't do it in 1 week. So for me, today, above that 241 would be a long entry. If we can clear above 241, I'm looking for longs on a continuation trade higher in a 243. Not a lot of meat here, but again, I do think that we go here eventually. So it is worthwhile to get those scalp longs in the highs in case it just EMAs all the way up, right? If we fail below 235.60, right over here, this breakout level from Friday, then it's no longer bullish, right? This is the level it has to maintain for the bullish momentum to proceed, right? This is the new structure that we have. 235.50 as your big level of demand below, right? Resistance above us, 241. Has to clear that level for upside. If it doesn't, I'm not logging this, right? Let's move on, guys. Let's move on. We have more tickers to go over. Let's go over Tesla. The 450 strikes again. I hope you guys were not Muppets and long into 450, right? So again, this is the thing: is Tesla could not break 450, and we knew this, right? This is something we spoke about day in and day out. 450, not 450, 450. Okay, 450 was low; it could not break, and obviously you seeing the remnants of that, right? The ramifications of it not being able to break above resistance. It sold off, right? And so at this point on Tesla, it's a sad chart. It's sad until it can reclaim 450. If it can reclaim 450, then we can go long, right? But as of right now, we stay away. We let it do its thing, right? It's still a scared, sad chart until 450 can reclaim. Once this reclaims, it will be unstoppable. Once this reclaims, it's going to be unstoppable, right? Where does it go to? Back into 466. Why is it going to be unstoppable? Because look at this, right? Look at this. You see a very high volume pocket over here above the 450s. The next high volume pocket is 455, but then really it's back into 480, right? So your high volume nodes are here, right? Here and here. Right, so your 450s, which is obviously the big level, 455, which would be your short-term target, and then 480, which would be your long-term target. So I do view that eventually it will happen. This will happen eventually. When does it happen? I have no clue, right? But when it does happen, this is a long first all trade. Okay, so that is the Tesla chart. Okay, let's move on. Let's go over a few other names. Let's go over Meta. So Meta, also unstoppable, right? Meta has been unstoppable, and Meta, the reason why Meta is unstoppable is because it just keeps holding levels. Now at this point, your level is simply 672. 672 is your big green level here, 672, 671. You can see that is the demand that is built up right over there, right? So this is your new level today. Are we above it, bullish? Are we below it, bearish? That's all it is, right? You can see yesterday's session, we broke above it. That was all that happened yesterday. But yesterday, we moved from our supply, or really demand now, back into our next level, which was 672. We broke above it. So this morning, this is your level today. It's simply just 672. Above bull, below bear, okay? moving on. Nvidia. So let's go over Nvidia, AMD, and the SMH. Nvidia is holding 186. I mean, this is just a level. It held demand yesterday. Nvidia, in my opinion, was just not a very clean chart, though, right? I don't think Nvidia was a very clean chart yesterday. It basically just held above demand all day, right? You saw that we had Thursday's highs, Friday pre-market level, Monday pre-market level, and we just stayed flat all day. So we know something. We know one thing. We know this. I think anybody can tell you this. Doesn't matter who you are. 186 is support, right? This is the support zone on Nvidia. Do you want to be short on the support? Probably not. Where can you go short on Nvidia? Probably here, right? That would be a short side move you can watch out for. Does it do it? I don't know, because as of right now, this is still a long. So right now, your bull bear pivot is simply 186. If we are above 186, we're bullish. If we're below 186, we're bearish. Right now, we are technically bullish, but does it continue? I just don't know, right? It's been a little bit of a lackluster chart. If it can build above these highs over here, the yellow level, we go back into 192.50. So my scenario is this, or it's this. And those are my bullish scenarios. My bearish scenario is if we break beneath 186, in which case we see us sell back in 184 and we gap fill, right? This would be a little gap fill to play under 186. 186 breakdown, back in 184, okay? On the AMD chart, AMD was weaker. And this is something that's interesting is you have chips. I mean, you can't say Nvidia is bearish, though. It's not bearish. But chips in general are weak, right, compared to the overall market. For example, look at Nvidia and look at SPY, right? I mean, just completely different charts here. Nvidia and AMD were not longs yesterday. I mean, they were. I mean, look, you could have made money on some longs, I'm sure, but they were. It was not the theme yesterday. The underlying theme on AMD, Nvidia, and semis was not bullish, right? It was not bullish. You can look at AMD this morning, and you're going to see that even though the market's gapping up, AMD is giving you the saddest gap up of all time. This is like a fake gap. Look at this. This is just not even a real gap. You can see a little pop up higher and fail back lower. So AMD, some weakness here. And the reason why it's weak is because AMD needs to tap this level. I still believe this, that this is the level it has to tap. It's back at 239. And I stand by that idea. Does it actually do it? I don't know, but that's what I would trade off of. So if we can break beneath this little trend line here, I think if you break below yesterday's lows at 250 and change, we see it moving at 239. So if you want to trade AMD shorts, you can look for probably some shorts under 250. If you break below 250, you can look for a continuation trade back in at 239 for a downside move, right? But again, here's the thing. If we break beneath our yesterday's lows on AMD, under this little bear flag on yesterday's lows for a downside play, and you see a sell off, right? You don't want to be a muppet and short back in over here, right? Because this is the 239 demand. This is your major retest level. We basically had resistance here, right? We broke out. We've never tapped this resistance, this new support down below, right? We just rallied, right? And so when we do pull back to 239, I do believe we see at least a 1, 2, 3, 4 delta move off this level. At least one delta, right? At least $1. But let's see what happens here. This would be a long for me. If we pull back to 239, this would be a long. Assuming, barring all news doesn't go crazy now, if some news comes out and something changes, right? Then yeah, okay, probably breaks. But assuming everything stays the same, 239 pullback long is still valid, right? That's what I'm trying to say here. Okay, let's move on. All right, let's move on, guys. Let's go into our other equities, guys. What am I missing? Let's go over SLV, GLD. SLV 1 hour chart reminds me of Nvidia back in 2025, 2024, 2025 really. It's just rallying higher, right? Do you want to chase this higher? Probably not, right? If you are a long of SLV, if you are, a grandma or a grandfather and you had some SLV longs, yeah, sure, right? Just hold it, I'm sure, right? Just maintain it. Is it something you want to jump back into and chase the upside move? Probably not, right? Probably not. Where's your pullback long retest level? It's 87, right? It's 87. 87 SLV is your pullback long spot. That's where I would reasonably look for longs, right? If I want to look for a scalp long upside move, 87 is my long spot. It's not over here. It's not over 100, right? It's just not where it is. GLD, probably same idea. GLD on the 1 hour chart, where's your big retest level? It's back over here now. It's back at the 420s, right? 420s, maybe even 426. You can see some levels there. This whole area over here would be retest level. This whole zone between the 420s and the 426s would be retest area to watch out for, right? So As much as I want to tell you go long on GLD, I wouldn't go long GLD until pullback. And even this is like, it's just like, look at this right here. It's 403. Right? This is like short term, right? The level I just gave you, this is your short term demand, right? Your long term demand here on GLD is right over here. This is your long term demand here. At some point, GLD is going to pull back here. I can almost guarantee you, right? I can almost guarantee you GLD pulls back to 402 at some point, right? That's your major retest level. And so if you want to go long on GLD, look at the volume over here too. You want some proof behind what I'm talking about. Look how thin the volume has become, right? Look how much volume is traded over here between the 360s and the 402s, right? And now you can see how thinly the volume is trading over into these highs. So you know this, like you know that this is not bearish. I'm not saying this is bearish. I'm not saying let's short this, or I'm not saying we sell all of our gold and run away, right? Like goblins. I'm saying that if you want to look for re-entry longs, first of all, you can sell, right? If you want to sell, this is your opportunity, right? You can get some off, trim some. But I'm not ringing the alarm bells saying we gotta sell immediately. I'm just saying if you want to trim higher into highs, this would be a point to sell. But your demand below is 426. Your mega demand below, your re-entry longs is 401, right? And you know at some point this will happen. Don't be surprised if it happens, okay? Let's move on. Let's go over one more ticker, guys. Let's go over one more ticker. Let's go over one more. Let's go over Oracle. Let's do that. Oracle, ORCL. Oracle, I think R is in Oracle, right? I think you got a good trade here on Oracle. To be honest with you, I don't have much analysis here. I don't want to give anything because I don't have anything prepared. So I'm gonna reserve my right to. I'm gonna get my get out of jail free card over here. I reserve my right not to say anything because I just don't know, right? Oracle is something I haven't charted in a long time, guys. That is it. UNH. No, we have to do this. UNH. So UNH, big earnings, right? Big earnings this morning. And yesterday we had some comments from Trump, which caused some downside. So double whammy downside. We had downside yesterday after the Trump comments, and then also some downside this pre-market session following earnings. Where does it go to at this point? Well, your demand below, your first demand is back at 285. Your second demand is below here at 240. And beyond that, that's really where it is, guys. I mean, it's really 185 first. 285 first. You can see that's your next big level. So we're pulling back into our first level of demand here, right? This is your first major level. Your second major level is back at the 240s. So I think at some point this chart bounces. I have to look at the actual earnings and see what happened here. But your level is here and there. Guys, that's it for me today. Have a beautiful Tuesday session. Trade safe, trade smart. I'll see you guys all in live. Bye, guys.